Hi guys, it's Susie from Esoteric Trading Solutions. I hope you're all well, looking after yourselves, being kind to yourself, being kind to your family and friends, being kind to your putty cats, your animals or your dogs, and just being kind to everyone else and making it just a better, happier place than what it is. I'm just looking at the Dow on another chart package, and I like to do that as well. And I'll look at it on TradingView as well, but it doesn't look too good at the moment, and this is quite a bearish channel here as well. So look, I will talk about crypto markets as well, so we'll get into that as well. So look after yourselves, and I will go to TradingView. Thanks, guys. Now, I just want to have a look at the technicals of Bitcoin US, and on the daily, it has got down to, looks like about 3460. Excuse me. Out and trying to move up. So this parabolic sell, we have got price green action here, but I think it's probably a little bit premature to get in on that, to be honest with you. It is a big downward channel. If we look at the shorts of Bitcoin, interestingly enough, the shorts of Bitcoin are getting shorter and shorter. So which means they want to keep shorting this market. So sorry, let me just quickly put this in. They're not actually covering their shorts. They're actually getting shorter and shorter. So they're taking a short position. The traders taking a short position. Obviously, they think the market is going to go lower in price, and that's pretty much what that means. So the short positions are at record highs of 40,000 Bitcoin. If we look at the 4-hour, if we take that to the daily, you can see from previous positions. Let's just move myself out the way. It's annoying. Going back to September at least, August, as a previous high. So looks like, it's heading back to that 40,000. The short have been getting shorter. So in other words, the trade is getting shorter and shorter. So if we look quickly at Ethereum, and just keep that one in mind, and look at Ethereum shorts, you'll see the same story. And then if we look at Ripple shorts, you'll see a different story. So Ethereum shorts are getting higher and higher and higher, and that certainly explains the price action from Ethereum. It's obviously gone below $1 in the last I saw it's about $88. So Ethereum's had a lot wrong with it fundamentally. I haven't liked Ethereum for some time. I never really liked Ethereum, and it doesn't surprise me they're actually shorting this even more and more and more. So let's just quickly look at the price action of Ethereum. Yes, prices have been absolutely hammered, the last week or so, and again, it's gone below that 100. Still looks very bad technically. Still going down, 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 and let's quickly go to the 4 hours on that. Is trying to make a rally here, but again, we're not seeing consolidation, so there's no reason why I would buy anything here. Plus there's inconsistencies between the daily and the 4 hours. So if we go to Ripple shorts, I just want to show you something here. Ripple shorts, quickly put that in, and this is from Bitfinex. Okay, so there are other markets, don't forget there's cash for difference markets, futures markets, all sorts of markets where people can actually get short Bitcoin, XRP, or even Ethereum. Okay, so this is Bitfinex effectively. So if we go to XRP on the daily, you'll see the daily it was up here, and they've come down again, and now they've gone up again, and now they're starting to cover their shorts. Okay, that's on the daily. It's still probably as extremes. Actually, it's probably a bit more shorter than I looked last time. So it is still up there, where you can see the other two contracts, Ethereum and Bitcoin, they are actually getting shorter. If we go to the 4 hours, they have covered, and now it's starting to move up again. So clearly they're starting to hit XRP as well. If we go to XRP just very quickly, it's technicals. I want to get through this. I get complaints from people. Some people that my YouTubes are too long and all that sort of thing. I can't please everyone. Some people say it's okay, some people say no. So if we look at the dailies on this, plus I want to have a look very quickly at the fundamental. The daily does look, unfortunately, like XRP can get to about 27 cents. Okay, that low there, back there. If we look at the 4 hours on this, again, I don't trade XRP. I just basically hold it as an investment. So, it's plateauing. Everything else is looking the same. Another cryptocurrency they've really hit is Bitcoin Cash. really hit it. So what is that? BCH. You know, that's down about 81% from the end of October, which is a massive move, seriously, in anyone's language. And it's got to do with you know, the hacking. Hacking is not mining is not as lucrative as it used to be, and the same with Bitcoin. So mining is not lucrative, and a lot of Chinese miners have basically closed down, that sort of thing. And it's something to do with the hash rate. And if the hash rate gets lower and lower and lower, then the chance of getting an attack, a 51% malicious attack, gets higher and higher and higher. So this thing has been absolutely killed. You know, if we've got the the 10th of November, it was around $639, and what are we looking at now? Less than a month ago, it was $639, and now we're looking at about $106, if that's correct, according to TradingView. That's just massive, a massive hit. Seriously, just wondering whether they've got shorts on this one. Some have shorts in terms of Bitfinex, some don't. But again, no, they don't. But you know, yeah, you may find other markets, other cryptocurrency markets have got shorts in this contract. I'm not sure, but I don't actually, you know, play around this contract, not since that time where it got actually traded up to 9,500 on Coinbase. I just thought that was just crazy, and wasn't even trading there. So it was about 1,200, 1,800 at the time. So the 4 hours, like everything else, is trying to balance. But again, we have got a buy here. But again, I wouldn't take any position just simply because it's not consistent with my daily or my 4 hours. Another one they've hit as well is EOS, and rightly so as far as I'm concerned. I've always felt that EOS was a scam, and honestly, they've had so much trouble with their blockchain fundamentally. They had trouble with the administration. They couldn't get a quorum. And now the founder of EOS says he wants to go to another project, which just sounds very, very suspicious to me. Again, this as you know, this ICO was an ICO for about 12 to 14 months, 15 months, took $4 billion from the market, and it was still on Ethereum's blockchain. And then they went to their own blockchain, and there was an absolute debacle about their own blockchain, seriously, and it still wasn't working. There were still troubles, and then they couldn't even get a quorum, and all sorts of things were going on. It doesn't surprise me they have smashed EOS, and rightly so, because I always, and I've always said this, felt that EOS was just such a joke to where it was being priced, absolutely, compared to anything. You know, it should be, as far as I'm concerned, it shouldn't even be priced up here, even here, at $1.66, when it doesn't have any clients, it's got nothing, it doesn't generate any revenue. You know, compared to, I know I'm going to bang on about XRP, but seriously, the valuations in this cryptocurrency market have just been insane. And you know, I think EOS could go down to, you know, probably below, you know, 30 cents, and that's where it should be, well below 30 cents. And to me, this still is a big sell as far as I'm concerned. Not that I'm saying to you guys sell it, because you know, I'm not a financial advisor, I don't know your risk tolerance or anything like that, but just from the technicals and the education point of view, it looks like it still could move further down as far as I'm concerned. So you know, the ones that have been really hammered are certainly Bitcoin Cash. It doesn't surprise me, because people lose confidence when there's all this, you know, trading going on, you know, where one minute was sort of 1,600 and the next minute, or 1,200 where I saw it, and the next minute went up to 9,500 or something. Just crazy stuff. You can't trade that way. If you were trading, you would have been blown out the water, seriously. You know, and it's to me, it's untrustworthy, because you don't know what's going on. Okay, so I won't look at any more of the technicals. I really want to focus on the fundamentals and what's going on with this market. And it's the same story I was talking about last time. The US equity market, in my mind, is very, very overvalued. And I've said that before, and I will say it again. And I haven't just been saying it now because the Dow is off, you know, it was off one stage last night. I was trading at 600 points, 650 points. Then it had a miracle run back up 500, 600 points. And previous to that, it was down 800 points. And it came down from the lofty 27,500. I believe the Dow, even here right now, 25,000, is still way too high. And I've said it before, in '07, the Dow was around 14,500 when I was trading professionally in markets, you know, and even then I thought it was way overextended, okay? The Dow and the S&P, absolutely. If you look at all the reports coming out in terms of the equity, the seasonal reports that come out, you know, the last reporting season in the US, you know, yes, the profit line was growing, but the revenue line wasn't growing. And the only way they were growing the profit line was reducing their costs and not increasing their revenue, okay? And that is dangerous, you know, where their price is so much higher than their earnings, like over and above their earnings. So, for example, you know, if the price earning ratio is 20 times their earnings, you know, that makes it, you know, a very expensive company compared to the average PE of the US market, around 15 or 14, the average over a long-term period, say over 100 years or whatever, or even around 12, 15. So anything that's trading 20 to 25, 30, 60, tech stocks, whatever, unless they can generate the revenue to substantiate those price earnings going forward, it is concerning. And don't forget, equities are long-winded in nature. In other words, the company is always valued like an ongoing concern that it's not going to go bust. And so all the cash flows, the net cash flows, i.e. the revenue cash flows that come in and the expenses that go out, all those cash flows are all netted off, and you come up with a positive cash flow over time for the valuation of a company. And it's called the net present value model. And again, I've said this before, and the discounted cash flow model, and that's all discounted over an interest rate. Now, if we've got a rising interest rate environment, which we have, okay, a rising yield environment, i.e. interest rates are going from 1% to 3% or 4%, and you're valuing all those cash flows forward, one cash flow next week, one cash flow the week after, 3 months' time, whatever, 5 years out, 10 years out, you bring them all back to discounted net cash flow, net present value. You're actually valuing those today, what those cash flows are worth today, over an interest rate. Now, generally what people will do, the analysts or the people that value equities, the quant people, they'll value those over, say, a 10-year bond rate in the US, for example. Now, if the 10-year bond rate has gone from 1%, as I've said before, to 2% or 3%, say the net cash flow is 100, and you're valuing it over a 1% interest rate, you come up with a price of 100, right? If all of a sudden the 10-year bond is 3%, you know, you're dividing 100 by 3, the price is 33.3. You know what I'm saying, for the share price. Look, obviously there's more and more that goes into that, but you get the general gist. So in other words, if the share price is trading at 80, but a valuation is at 33, you know, and an equity person, a broker, comes out with a report saying this stock is way too expensive for its valuation, where we believe the valuation is, given forward projections of their revenues and everything else and their cash flows, the market will immediately start selling that equity, okay? Just like, say, for example, General Electric, GE, which cut its dividend. People were buying GE because it had a high dividend. But when they cut that, you know, obviously reduced the valuation of that share, because the way you make money with shares is capital appreciation and dividends, right? And those two together is the way to make money with shares. Now, you know, if the dividend's suddenly taken, then you can't substantiate where a price is within the share price, where the share price is. So, you know, if we go back, and how is this all related to crypto markets, right? Cryptocurrency markets. Every market in the world, whether it be a fiat market, is interrelated to the cryptocurrency market. And I'll tell you how that is. It's because of cash. Plain and simple. What happens in equity markets, like anywhere else, equity markets start selling down, and people have loans against their equity, margin loans, okay? And, people borrow money to invest in the equity market. And that's what they did because interest rates were very low, very low. So as the equity market keeps going down, people that have borrowed money, get margin called, by their broker or wherever they borrowed the money from, to actually top up, their equity positions, right? Now, if they can't do that, then they have to sell their equity positions, okay? That's a fact. Now, what happens is when people need to come up with money fast, they look for the quickest assets to sell, okay? And of course, as you know, in the cryptocurrency market, you can pretty much sell, i.e. XRP or Bitcoin or something else, and get your cash pretty quickly compared to other markets, like other fiat markets, right? So every market is basically connected by cash, okay? Whether it's the FX market, whether it's the money market, whether it's the foreign exchange market, whether it's the mortgage security market, whether it's the credit market, the corporate bond market, and whether it's the cryptocurrency market. Now, I've always said, in times when the Dow and the equity markets come down, initially the cryptocurrency market will come down. And look, there are other reasons for it as well, which we'll go into. The cryptocurrency market will go down, okay? So, because people need cash, okay? And so they sell the asset, which is the most liquid asset where they need the cash right now, okay? And that's why we do see the cryptocurrency market going down at the moment when the equity market is going down. There seems to be a positive correlation between the equity market going down and the cryptocurrency market going down. Now, when the market becomes more mature and you have the institutional players playing in that market, the cryptocurrency market, yes, there'll always be a focus on cash, but eventually I think going forward you'll find a negative correlation between the equity market and the cryptocurrency market. But as you know, when markets are imploding and going down, cash becomes king. And in every market I've worked in where the equity market particularly, has fallen dramatically. I saw it in 87, I saw it in 99, I saw it in 2001 with the September 11 thing. Was that 2001? God, it's so long ago. 2001, yeah, the September 11 thing. I saw it in 2009 with the Asian crisis. I saw it in 2008. No, sorry, the Asian crisis was 1999. I saw it in 2008, right at the end of 2007, 2008, the GFC. In every market, cash becomes absolutely king. And without cash, everyone's in trouble, right? And that's pretty much what happens. So generally you'll find that, banks giving out credit or anything else, credit will tighten up quite dramatically. And at the moment, credit is certainly tightening up dramatically in the corporate bond market. In other words, if a corporate wants to go to the capital markets to borrow money, because corporate spreads have been so tight to government bonds, now it's going to cost them more money to borrow. It's going to cost them more in terms of funding or interest rate to borrow money from the capital markets, okay? And that feeds through to all other asset classes in terms of valuation. So I don't want to get too complex about this, but all markets, even though you say yes, the cryptocurrency market is decentralized and it's different, yes, it is very different. But what links the market, the cryptocurrency market, to all the other centralized fiat markets is cash. Okay, so think about that, cash. And when markets are imploding, every market needs cash. So, look, I don't want to make this too long because I'm getting, but what I do want to point out, and I want to just go very quickly to some of the fundamentals, okay? So just bear with me, just in terms of some of the main cryptocurrencies like Bitcoin, for example, okay? And, Bitcoin Cash. So this is like what my clients get access to, and we've got this huge database of all different things, and, my sister-in-law adds all different articles and reports and all sorts of things, and I do a lot of stuff as well. But something that did catch my eye, and I like to keep up to date with everything. I'm very, very thorough, and you just have to be when you're looking at markets and everything else the way I do. Interestingly enough, Bitcoin apparently in the last couple of days, apparently $1.6 billion worth of Bitcoin has been transferred. And it was in very, very old wallets, which, again, that's interesting in itself because the last move down in Bitcoin that we saw also came from a very, very old wallet, which it lay dormant for 2013. So all of a sudden, people have come out and seen the price of Bitcoin constantly move down because the institutional guys, whoever it is, can sell Bitcoin futures. As many as they like, because don't forget Bitcoin futures, they're an unlimited amount that you can do as long as you can come up with margin, money, to have that position on. So interestingly enough, it's actually bringing out people into this market that haven't been in the market for a long time, and they're obviously selling the market because the market is going down, absolutely. So what that means is, to me, and just going into this article, what it means to me is that, as the market keeps going lower, people have been sitting on profits for Bitcoin, and it looks like, they still want to lock in their own profits, because if the market keeps going down lower, they're obviously not going to have any profits left. That's what it tells me. Okay, so I might be wrong on that, but I don't think so. So it looks like 11 transactions of 66,000 and 32,000 Bitcoin each, has been coming to the market, and it looks like it's obviously being sold down. But again, these apparently were from very old, wallets, 2013, and I do remember vaguely that there was another 2013 wallet that was sold down quite dramatically, probably about 3 months ago in the fall before. So, it sort of strikes me as being very strange, but it does and it doesn't, because the thing is, if the market keeps going lower, you will find people start to sell because they don't want to lose the profits that they're already sitting on. And Bitcoin has come down a long way. I can't believe what it was a year ago that it was at 20,000 US. So, and this bear market has been going on for well over a year, since October 2017, when Bitcoin futures were introduced by the professional market. And just literally since that time, if you remember, the professional market actually ran up Bitcoin futures to 20,000 in December, and then just hit that market straight down for the last year or so. So coin capital markets basically had a balance of 800 million, and I think today, I haven't even looked at it, but the overall balance of the cryptocurrency market must be about 100 mil or something like that. It mustn't be very, very large at all. I don't know what it's got it here. I'd have to go down, but I don't want to waste your time here. But interesting in that itself. And also Bitcoin Cash, as I spoke to you about before, has been absolutely smashed. 81% a month. And yes, I mean, this article says it's intense, and you can by all means say, yes, definitely, it is intense, all right? I mean, literally. I'm not sure what the article says here, but, I suspect it's something to do with mining not being as profitable as it used to be, and essentially, people basically getting out of that. And then there's probably a concern that, if things aren't being mined, or if it's not being supported, that, essentially, there could be a risk of, 51% attack, something like that. So if we go into this, and also all the hard forks on Bitcoin and everything else, which have never been really supported. You've got Bitcoin Diamond, you've got Bitcoin this, you've got Bitcoin that. Seriously, it just goes on and on and on. So if we look at this very quickly, something issued threats against billionaire, okay, this guy, Kelvin Ayre, and it threatened to 51% attack Bitcoin Cash and to freeze the blockchain by spamming transactions. None of these threats were materialized, but enough to decrease the confidence of investors. Well, that doesn't surprise me. Towards short-term growth trend to Bitcoin Cash and BSF. So, that's worrying. And honestly, when the market is coming down, the last thing you need is something like this, because people will just, get out of this within droves, seriously. And something about, what's this, Kraken's usual listing requirements. Okay. So, absolutely, this is a red flag to traders. If there's custodian issues, traders don't want a bar of it and they will automatically sell. If something smells, traders will just get the hell out of there and sell without even thinking about it. They'll sell first and, see where the dust hits. But, as a trader, you don't muck around, you just sell and that's it. So, that's a massive fall, 81%, massive, absolutely massive, considering Bitcoin has fallen 42%. So, that's just incredible. But anyway, look, that's sort of all I want to talk about just in terms of that. Again, if we look at rates, and again, look, I look at a lot of different stuff. If we look at data, the Dow's now down 120 points. That's interesting. I still don't like it. Yields have been going up a lot, okay? So if we look at the 10-year yield in the US, for example, if we look at a year, we'll say if we look at 3 years, okay? If we look back here, this was, back in 2000, just middle of 2016, okay? 10-year rate was at 1.37, right? We're now looking at, over 3%, okay, and rising. We've also got rates in Europe rising quite dramatically. We've got interest rates rising in Japan, Asia, Australia, and everywhere, okay? And that's not great for equity markets, not at all. Plus, the yield curve is basically starting to invert again, which is where the long end of the rates are actually getting lower than the short rates, because the short rates are much more tagged to the Fed's rate, to the Fed's rate rises, okay? So, but also there is an economic theory out there that if there's, inversion in the yield curve, that there will be recession going forward, the next 10 years or 20 years or whatever it might be. I tend to think that, the problems were not fixed from 2008. And I think, the stuff that I'm seeing in markets with credit spreads starting to blow and high default rates and high debt levels and those sort of things, and a high stock market are very, very, to me, very reminiscent, of the 1929 crash. Just before that, the effervescence, the market was at all-time highs, and then we saw, with a crash, money gets pulled from everywhere, projects get stopped and everything else, and then unemployment starts to rise. And I certainly don't think, the GFC has, the problems have been fixed since the GFC either. So, that is worrying in itself, I have to say. Plus, obviously, the Japanese thing, the Chinese thing, obviously the Chinese trade, well, obviously the trade wars between the US and China and whatnot. So that is definitely worrying the market. And this Dow, as far as I'm concerned, will probably be a lot lower tonight. That's my bet on things for sure. And again, we will see that in terms of currency and everything else. Generally, if the Dow's down, you'll find government bonds. People buy those for safe haven. They'll buy government bonds, but they will get out of risk assets. So what that means is they start selling US and anything else, and they start buying yen, Swiss franc, Scandinavian, which are considered risk-off foreign currencies, and they'll sell anything else. And, you see this with the Dow Industrial Average, Transport Average. The VIX has been rising. Again, we've got the CBO, Chicago Board of Exchanges Volatility Index, which is known as the Fear Index, and that's rising as well. Okay, so you know, I know I don't paint a very pretty picture here, but this is markets, and you know, we all need to be pretty careful at the moment, because I think there's a real risk that you know, obviously rates are going to rise even further, and you've also got the Italian story, okay, you know, with the European Central Bank, and they don't want to comply with the European Central Bank in terms of fiscal responsibility, which means the Italian yield curve is actually moving up quite high. In other words, yields are going higher and higher, and you're also seeing it in the peripheral economies like Portugal and Spain as well. So that affects, you know, investor sentiment as well. So, oh God, I only wanted to make this 8 minutes. Sorry. Oh God, I start yapping, and before I know it, half an hour's gone. And credit derivatives. Look, I could just talk and talk and talk. Sorry, guys. Look, I better leave this. Please be kind to yourself. Please look after yourselves. Be kind to your family. Be kind to you. Be kind to your friends. Be kind to your animals, putty cats, all your animals. Please make this world a better place, and just be kind. Try to be anyway. Look after yourself, guys. I know it's not a great picture. Look, we're all losing money. Can't get too upset about it. Markets do come down and they do go up. You know, I remember in 2008 when I was, you know, 2007, 2008 working, and honestly, it was just terrible. We thought the stock market would never recover, but it did. Markets do recover. You know, yes, they can be in bear markets for 2 or 3 years, but they do recover most of the time. So yeah, it could be a very interesting night tonight. We're seeing a lot of red in the equity market, and that doesn't surprise me. And now I'm quite hot. Anyway, look after